What's up, everyone? Brian Steer, Ben Haberman, Blue Homes Real Estate. We're here today with one of our primary lenders, Mr. Doug Miller of Aspire Home Mortgage. We're going to jump into a talk about credit, how you can create credit if you don't have any, and how you can repair your credit if your credit is a little dinged up. If you're looking to buy a home, this is super, super important. So you're going to have a lot of good information. Feel free to drop us any questions in the comments, and we'll certainly get back to you. So we're going to start with no credit. Basically, Doug, if somebody has no credit, they're fresh out of college or high school, and they want to start to establish credit to start being able to purchase assets later on in life, what are some good ways for them to get that credit rolling and get it to a good number quickly?
Sure, it's a question I get asked quite a lot. So the primary thing I try to advise my clients that don't have any credit is to go out and get secured credit cards. If you go into any of your local banks, or if you Google secured credit cards, it'll bring up a lot of places that you can sign up with. The way they work is the credit card company will issue a card with a nominal balance, say $500 of available credit. You have to then give them a deposit of money equal to the line of credit that they're going to issue you. And they hold that money as collateral for the card. So if you don't make your payments, or if you default on the card, they then retain it. If at some point in the future, if you cancel the card and you've paid it well and properly, they refund you your money. Those cards usually only come, like I said, with a $300 to $500 limit, and they usually come with a pretty high interest rate, to be honest. But you know, the trick with those cards is you get the card, you open it up, and you go out and you put a tank of gas on it, a nominal dollar amount, $30, $40, and then you make the minimum payment. You should never max it out. What the scoring models will read is available credit. So by keeping the balance low on that secured credit card and making the minimum payments, you will probably start to score after roughly 3 months. And you need two. You can't just do it with one credit card. The scoring models won't pick you up with just one. You'll never get credit scores. You need two open, active pieces of credit. That's the number one way to get it started for yourself. And then there's some other ways that you can start into it as well. We can talk about those too. You can always go to your family and ask to be added on as co-signer. So if it's a young person, or any person, but if you want to get yourself added on to someone's already existing credit, that's a way for you to open up with without having to apply anywhere, without really having to put up any money or going with the secured route. Your mother or father can add you on as a co-signer, or another family member, and that's an alternate way. I wouldn't recommend doing the authorized user. An authorized user is when you get added to somebody's card to be a user, but you're not actually responsible for the payment of the loan or of the credit or the debt. Authorized user cards show up on a credit card that way, or on a credit report that way. And from a scoring perspective, I don't believe it's the best route.
Is there, I have a question about that. Is there an age limit to that? Like, so for instance, I've heard about this before and thought about it. It was a good idea to put my kids on one of my credit cards or a bill at some point at a certain age, just to start building their credit, even when they're 15 or, whatever that is.
I don't honestly know that answer to that question, Brian. I don't think you can put a minor on though. That's the thing. You know what I mean? I don't know that, because you're gonna have to put an age or a birth date in when you're applying for these things, or when you're being added onto an existing card. I don't think you can be a minor. I believe it's just not allowed to be done. But that's a good question. We can find out. I can find out the answer for you on that. Another good way is going to and applying for like department store cards. They're a little more lenient. Yeah, they're always trying to give you those credit cards when you're shopping at the store for 10%, and they get 10% off. And if you apply with enough of them, you probably will get one at some point. I don't think that's a very efficient way to do it. And I'm not a big fan of store or apartment cards anyway, because those types of cards usually lead people into credit trouble. It's just, again, it's no rhyme or reason as to whether or not you get the card or not. So if you're actively trying to get your credit opened and established, it's just not the most efficient method, but you can do it. Here's an alternate way to get your credit opened that's unique to down here. If you go to Jersey Shore Federal Credit Union in Rio Grande. They're in the strip mall by the AT&T store and UPS store. If you go in there and ask them for a credit builder loan, what they will do is they will set up an automatic pay out of your paycheck or out of your bank account for I don't know, $75 a month, $100 a month, et cetera, some type of nominal amount like that. They will then put that money that they're charging you into a savings account to give it back to you when you're finished. And they'll put you on a 12-month term, and they will report that to the credit bureaus as credit. So it's really just a savings account that's being shown to the bureaus as a bill payment system. And that's a way to do it. And that's a good way to save money too. So you're building credit and saving money at the same time. There is one downfall, and I know they were working on it. They weren't reporting to all three bureaus. They were only doing it to TransUnion, I believe, was the last time I checked. But it does work, and it helps people save some money. And then the last way that's good for people, and this is, if you Google, how do I get my rent reported as credit? It'll bring up several sites that will actively show your rental history on the credit bureau. And I believe there's a fee that they charge for it, and but it works. And they report it to all three bureaus, and I've had several clients that have done that. And once you get your credit established, you can obviously get it removed and take it off. But that's a system that also works, and makes things a little simpler when you go to get a mortgage if you have to verify your rental history because it's already on the credit report.
That's something that the renter has to request from the tenant has to request from his landlord, from their landlord.
Yes, you go to the site and then you follow through their steps, and then the credit bureau of that company will contact the landlord to get the information uploaded monthly.
That's a good thing.
Yeah, and I mean, look, you can pull up. There's a couple, Ben. There's one like Rental Karma, Rental Credit Reporting. There's a bunch of them.
Cool.
And it works. I've seen several people use it. I've seen lots of credit reports with that on there already, which means that the people that did it at some point to get their stuff established. But that's a good way to do it because most people are paying rent and might as well get credit for it in the form of a better credit score.
Yeah, those last two seem to be really good ways if you're planning to buy a house in the future. You can a forced savings account that gives you credit, which is great if you're saving for a down payment. Mm-hmm. And then obviously if you're renting, you're getting credit for being on time as a renter and building your credit that way. So if somebody's renting and looking to buy in the near future, those last two seem like two really good ways to save money and build credit at the same time. And
yeah, they're a little bit more long term. You know what I mean? All these strategies that we just talked about, you're realistically, if you started, you're talking 3 to 6 months before you're scoring. You know what I mean? At least 3. It's the minimum of 3, but more likely it'll start and open up at month 4, 5, or 6.
Gotcha. All right, cool. All right, I think there's some pretty good ideas for someone who's looking to establish credit, someone who has no credit, because as far as I understand, having no credit sometimes can be worse than having slightly dinged credit. So you probably want to get moving on that. But now let's look at the situation where we see a lot of people nowadays, they reach out to us saying, hey, I'm really interested in buying a house, but my credit's not so good. I have this or I have this I need to take care of. So I'm going to jump into a little bit of credit repair questions that we came up with for you here. Ben, you want to fire away?
Sure. All right. So once you got your credit rolling, and then you need to repair, what are your thoughts on those monitoring systems like creditkarma.com and?
I like Credit Karma and the other ones. There's pluses. There's one negative in particular, but the pluses are that you're going to keep an eye on what's being reported to the bureaus on your behalf, and that's huge. If that way you spot something that's inaccurate quickly, or if something has happened that you're not aware of in the form of like a collection account for a medical bill or something like that. That way you can identify it early and take care of it. The one drawback with those types of reporting systems is they give you a score. The score is misleading, and it's misleading in the sense, and this is just true about the whole credit industry. Depending on who the end user is on a credit report, being personal, which was what Credit Karma would be, the car industry, the credit card industry, the mortgage industry. Every industry gets different scores. And what I've found with Credit Karma in particular is that the scores the consumer gets are easily going to be 50 points higher than what I would get. So yeah, most people do not understand, or they don't realize that that's how that system works. And they'll call and thinking that their credit's a 720, and then they'll find out they're really a 670.
That's a big
So
difference.
that's the one drawback. It's not good for scoring, but it's very good for keeping an eye on your personal information and on your credit report, on what's being reported to the bureaus.
So when it comes to debts, some people will say they have no debt and think it's a good thing. Is it important to have open lines of credit with balances on them to keep your credit score up or help repair your score? I guess I would ask.
Yes, emphatically. Paying off your credit. If you're trying to build your scores, you should not pay off your credit cards each month. You should leave a small balance. You want your balances to be no more than roughly 20% of the available credit. So if you have $1,000 limit on your card, you want your balance to be under 200. The scoring algorithms, however they're written, they reward you for that. So if you pay it off each month, it's not going to help you long term. Or if you don't keep a balance on it at all, just an open credit card with no money on it, it's not how. And if you're not making payments each month, you're also not helping yourself. And that's the key to having a balance. You're always going to be forced to make that payment. And it's the payment history is what will get your scores boosted upwards.
Got it.
Okay.
How about clean payment history? How important is that to have that in the past 12 months?
It's fundamentally huge. If you miss a payment and you then come see someone like me, if you've missed a payment within 6 months, your scores will be trashed. And it's unfortunate that way, but the closer the credit check is to the date of last delinquency is crucial. And if you've missed a payment inside of 3 months, you shouldn't even call someone like me. Wait.
And missing a payment is like they give you a lot of leniency, right? It's not like if your mortgage payment isn't in by the 1st, boom, hit your credit report. I mean, I've had people like where I mistakenly, didn't pay it, and they call me and they say, you got to pay your bill, and you pay it. I mean, it doesn't happen right away, the missed payment. It doesn't hit your credit report right away, right?
30 days.
It takes 30 days, right? Yeah.
30 days. If you're due on the 1st and you pay it on the 15th, you're fine. It's when you go past 30 days is when they start it hits you. And if you miss a payment, it's going to torture scores. And I don't care how many, it just could be one missed payment in a year, but your scores are going to be 50 to 100 points below where they were. And you have to really be religious about staying on top of making sure you don't miss any payments at all.
Yeah, and a tip I have there is setting up bills on auto pay. At almost all banks have online bill pay now. Set all of your accounts to auto pay. Mm-hmm. You want to change them, go in there and change them. But
it's shocking the number of times that I've run credit reports on people, and they've got plenty of money, and they'll have, and this is why I don't like store credit cards. One of the individuals will have opened up a store credit card to get 10% off, and they have a $20 balance on the card, and they forget about it. Mm-hmm. And next thing you know, they pick up a 30-day delinquency over a $30 charge, and their scores are rocked for 100 points. I see it all the time. My wife is not allowed to open up any store credit cards. None.
My wife asked me for TJ Maxx every day.
At the counter, we're not allowed to get those.
No TJ Maxx cards.
That's a big no-no, right? Yeah.
No store department cards. If once you have established credit, you do not get those anymore.
Just have, in my opinion, you should have one credit card, maybe two. I have two. I have a Bank of America and a Discover card, but there's no need for it. Just find one with good rewards.
And cash back and rewards and call it a day.
Yeah.
Well, what's also true about that is age. If you have a lot of credit cards and you're thinking about cutting them down to get down to the two that you really use, you should always keep the two oldest. The older the card, the better your scores will be, because it establishes length of time in your relationship with that particular vendor. Mm-hmm. And so you get rewarded for that with higher scores by length of time on your cards.
So what if So now what if somebody has a couple different things, right? Let's just say they have a 30-day past due, they have something in collections, you know, they have a couple different hurdles to go over, but they're limited in what they can do and when. What is there an order that makes the most sense to go in to clear those things up?
Well, the delinquencies you have to address completely. Like you have to eliminate them. You can't miss payments. No matter what you do, you have to find a way to make that payment. And then once you're on a path where all that stuff's being paid, then you can start to tackle the collection accounts and or charge-offs. There's a difference between a collection account and a charge-off. Charge-off is when the lender has officially decided they're not going to pursue you for the money anymore. They have taken the tax write-off and they have charged off the account. A lot of times we can work with charge-offs. I can work, FHA doesn't count them against you. If the lender has charged it off, it's still going to affect your scores. And if you want to improve your credit, you're going to go after and attack those, but you do those last. Collection accounts will also affect your scores. You want to actively contact those creditors and find a way to get them resolved. And I always recommend to everybody for both collections and charge-offs. First thing you should do is offer them 50 cents on the dollar. But call them up, tell them if you pay half, will they satisfy? The scoring models don't really affect you if you paid less. You're rewarded for solving the problem, and that's where your scores improve. When you see a credit report with a bunch of collection accounts and charge-offs on it, it just says that you've gotten bills and failed to find a way to solve whatever the problem is for those bills. Either you didn't pay them, or there was a dispute, or any of those types of things. But they don't want to see that. The scoring model takes into account that you've not been able to complete the transaction. So when you get them zeroed out, you get rewarded in higher scores because you've been able to complete the transaction and solve the problem. So you want to make sure you handle delinquency first, then collections, and then charge-offs last.
Is it important to have high available credit?
Yes. You are rewarded, and this goes back to when we were talking about secured cards before. If you have 80% available credit, your scores will be higher. It doesn't matter if the card's $10,000 or $30, or excuse me, like a $500 card. It goes by the percentages. So when you see when your credit card is over 80% of the available credit, the scoring models will consider that maxed out, and you will be punished for it. Your scores will drop. So having good available credit is a very, very good thing to do to keep your scores up.
Can you have too much available credit though? Can you have 16 credit cards open, and can that affect you negatively?
Yeah, if you have that much debt that's open, even if it's zero balances, you want to cut them down. Not to mention that you're right for fraud with that many open accounts. But you would definitely want to skinny that up, especially once your scores are established. At the beginning, I mean, you don't want to have that many open at a given time, but at the beginning when you're building, it's probably not a bad thing to have more cards open with small balances on each of them. But once you get your scores up over 700, you should really thin the herd.
Gotcha.
Yep.
How about what will opening up a new account do to my credit?
That's a great question. So when you open up a new account, and not just apply, when they actually issue the card and it's officially open, your scores will go down for roughly 90 days. And it's for any new piece of credit. I think that occurs if it's a car loan, credit card, anything. I don't necessarily agree with it because it means you're exercising your right to get credit. But the scoring models definitely punish you by 50 to 75 points for opening up a new piece of credit. That's why whenever we're doing credit, whenever we're trying to initiate credit for somebody, I always say it's going to take at least 90 days for your scores to open up where you need it to be, because when you open up new pieces of credit, your initial scores are going to go down. You got to wait for that initial opening credit hit to drop off, and that's the 90-day mark. At least that's what it's been explained to me by.
Yeah, I think the bottom line is you can't, once you hit that point in your life where you're trying to make some moves and move up the ladder, you can't do it with bad credit. So starting early on, you know, even in high school, I mean, like we should be more focused on having a good credit score. I mean, as corny as that sounds, it's not corny because it's like you can't get anywhere in life if you have a terrible credit score. So focus in on it. It's actually not that hard. And once you establish it at the end of the day, guess what you have to do? You just have to pay your bills and you have to pay them on time. It's pretty simple, you know?
Just maintain.
Exactly.
Yeah, cleaning up bad credit is difficult. It's tedious. It requires a lot of effort on the consumer's part to deal with these collection companies and because they're tough to deal with, right? They won't talk to anybody. They're just looking to get paid, and it's very, very difficult to get that stuff cleaned up. And if you're not diligent on your approach to cleaning it up, it will take forever. And I've seen people that have struggled with it, and they just give up and they get so worn down by the whole process.
It also costs you more in the long run. It's better to be diligent about it up front and build it smartly, because even if your credit's not in the tank, but if you have a viable score that, yes, you can purchase a home or purchase a car, your overall rates can change. I mean, what's a borrower that's a 780 versus a borrower that's a 610, looking at interest rate rise, right? What's the difference?
Well, the big difference is not even interest rate, because when you're a 610, there's only one game in town for you. There's only one loan. It's FHA. And that means that you are paying PMI.
Right.
You're paying a steep PMI. The rates are a little bit better because the government's giving the lenders a 100% guarantee they'll get their money back in the event of default. But as a consumer, you could be putting 50% down and you're still going to be paying PMI.
Right.
That's a result of bad credit. You're paying more money. It's costing you a lot more money over the long haul for poor credit issues.
And it's because you're deemed to be a bigger risk. So if you take advantage, if you take the time to put your credit where it needs to be from the jump, or get on fixing it, it's just going to make everything easier moving forward.
Yeah.
And cheaper for that fact.
A lot cheaper. I mean, the very reason somebody should have to take an FHA loan out is because they're young and they are, well, not necessarily young, but you should be going FHA because you need down payment assistance. You have not been able to save enough money for whatever reason, and that means that FHA is the best viable source for you to be a home ownership. When you're going into an FHA loan because your credit scores are in the tank, you got to fix that. That's costing you money. And it's unfortunate, but I do loans for people all the time where FHA is really the only viable product for them to get as a result of credit concerns.
Right.
Yeah.
I think the bottom line is, like Ben said, let's, take care of your credit from the beginning. If your credit's not amazing now, hopefully some of these tips can help you out. And, if you're planning to buy a home in the next 12 months, it's time to get repairing it now and put yourself in a position to be in a position of power and not spend a bunch of extra money, and also be just a much more viable borrower when it comes to any kind of credit situation, car, home, whatever.
And reach out to us if you want to take that next step to repair your credit or learn more about credit, because we're here to help you. Talking to our viewers.
Absolutely. Right. So again, any questions? We can help you anything at all. Drop a comment or message any one of us directly. We're easy to get to any day of the week. And it's Brian Steer, Ben Haberman, and Doug Miller of Aspire Home Mortgage. Doug, we appreciate your expertise as always and your time, my man. Hopefully we'll get to talk to you again soon.
Thank you,
Thanks, guys. Good time.
All right. Thanks.